Good morning. This is Larry McMillan with the stock market update on Monday, March 29th, before the market opens. So on Friday, right at the close, the Dow and the S&P both made new all-time closing highs. They didn't make new intraday highs all-time, but it's pretty close. That's a little surprising. It didn't seem like the market was that strong, but it snuck that there at the end. On the other hand, NASDAQ stocks are struggling. You may have read over the weekend some of the massive liquidations that have taken place in some hedge funds out of Korea and Asia. And so NASDAQ is lagging well behind. So we still have this split market of sorts. But as long as the S&P chart is this positive, you still have to consider the basic case as being bullish. Now, equity-only put-call ratios have been rising, and that means they're on sell signals, so that hasn't really changed. The standard ratio still has a long ways to go before it even climb out of overbought territory. The weighted ratio has returned to a more normal state, but still is on a sell signal right now. Breadth improved greatly over the last 2 days, and that canceled out some breadth sell signals that we had in place and replaced them with breadth buy signals. So that's a positive for the market. The cumulative breadth indicators, however, have not moved to new all-time highs yet. New highs versus new lows also weakened this past week and gave a sell signal. But on Friday, new highs climbed back above new lows. So if we get more new highs today than new lows, that will put this back on a buy signal as well. So the internals appeared to be deteriorating a little bit last week, but there was no follow through after the sell off on Thursday. By the way, that sell off on Thursday bottomed out right around 38.50, and we had been previously saying support was around 38.70. So general support is in that area, 38.50 to 38.70. Volatility indices declined again, and the VIX spike peak buy signal is still in effect. So even though there was some pretty heavy selling in the middle of the week last week, it was not reflected in heavy buying of VIX. So the VIX volatility indicators, both the term structure and the trend of VIX, remain positive for stocks. So all in all, we're still seeing a positive outlook. Yes, there are some sell signals that have appeared from time to time, and we will trade those against the major core long position. But we do recommend that the core position stay long as S&P remains above that support level at 38.50 to 38.70. So thanks for listening. I invite you to come visit our website. We've got the new 16, I guess it's 14 seminar course that we're selling. And of course, our newsletters are still doing quite well. So good luck and good trading this week.